Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway on this Christmas Eve, bringing you the game plan with all the details on the technicals that we need to know going into today's shortened trading day. So again, markets will close at 1 p.m. Eastern Time. We'll watch very closely and see where things ultimately end up and then where we resume trading when it comes back on Thursday, when it's a normal trading day, both Thursday and Friday. We're going to take a look at crypto. We're going to take a look at the metals as well as oil and natural gas. But let's start out with the basics here. So let's get into the market in the pre-market. Now remember, today's the day where volume is going to be very light. What does that do? It means that generally the institutions are on vacation. Therefore, you have retail, which generally doesn't sell the market heavily unless they're scared. They're not scared right now. And in general, they're not shorting, right? Shorting is something that very few retail investors do versus institutions. Now, if we look at the market pre-market here, we can see the volume is super light and we're just floating gently sideways to up. So it's looking like a neutral to positive open. I would expect very thin trading action throughout the day and overall a neutral to upside bias on the markets. Now, just tuning in to the S&P daily chart. All right, so here we are in the S&P. Remember, we tagged my key target right up here at 6,100, literally to the point. We since then have dropped sharply and then are retracing. Now, in general, when you see a big red candle like this and it engulfs past candles, that's a bearish technical indicator. So again, what you're looking for is when you get one of these big down candles like this here, which is what we got right in here, you generally will see a neutral to buy upside bias, buy the dippers coming in, and you start to do this sort of pattern. That's exactly what we've started to do here. Now, the thing is, for those of you that know your basic technical analysis, we know that a sharp down move that engulfs past days, which is what happened there last Thursday, I believe, that again is bearish. And now we're creating what we would refer to as a bear flag, an inside bar pattern inside of that. Essentially what this is digesting the big down move. So you have the big down move, kind of creates a little bit of fear. Then you have some buyers coming in and saying, oh, well, every time it's gone down like this, it's rallied to new all-time highs, so let's buy back in. But when you get the bear flag, what is that telling you? It's telling you that there's also sellers here that are continuing to unload. So you get the buyers, right? The buyers coming in here, but also the sellers. That's not good. That's telling you again that it's digesting the move, and the path of least resistance more often than not will be another move to the downside. Now, it's almost perfect in that this sideways to slight up consolidation period is occurring going into the holidays because, again, what do we know about the holidays? It's mostly retail investors. So those retail investors are inching in. There are some sellers creating that bear flag. The idea being is that when we get back into January, I would start to look for another leg down in the markets, okay? So let's keep our eyes on that for the time being here. As we flip over to the NASDAQ, same sort of thing going on here. You have your wide range red candle on the charts. Remember, this is your bigger parallel, and this goes back a long, long way. We can see, again, perfect hit of that top just before the big sell-off, and now we are creeping back up, and the idea being is that you probably continue to go like this, and then you have your next sell-off once we get into January. All right, now a couple other things here. I want to spend a little time today, since there's not a lot of major stocks moving, we want to spend some time on chart setups that can make us money into year-end and into the new year. And I want to start out with Pfizer here. Now, Pfizer's a stock that in general, and I'll walk over to the big screen here, but in general, Pfizer's not a flashy stock. It's a vaccine maker. It's been under a lot of pressure. But look at what is happening here. So Pfizer's been in a downtrend pretty much all year long. But just recently, we had this sideways pop up, and then look at what's happened. What is that pattern formation? To me, that's a bullish pattern of consolidation. You could even make a case there's a cup here, and this is your handle or ladle, whatever you want to call it. The idea here is that what caught my attention on Pfizer is that breakout here that could be underway on the Pfizer chart, breakout level above 2650. Yesterday it closed at 2671. So this is very interesting. We've talked about the January effect plays, stocks that have been beaten down into year end, tax loss sellings, them keeping them under wraps, but this one's already starting to inch up just a little bit. It also pays a hefty dividend. So if you're someone who's a little concerned like me going into the new year about the overall stock market, I myself am looking to find names that have been beaten down, that are good quality, they pay a dividend, essentially they cushion it. because it's already been hammered. It's a profitable company. We know Pfizer is going to be around for a long, long time to come, and it's showing signs of a breakout. So again, Pfizer on my radar here going into January. We'll keep our eyes on that. Now, another one that I'm a fan of, it's also in the pharmaceutical/biotech zone, is this one right here. The name is Biogen. It's a profitable company trading at about a forward PE of 13 to 12, so low PE, but I'm really catching it. Listen, this one really hasn't broken up like Pfizer just yet, but it is into major technical support. There's a trend line down here that goes back years and years and years, and then we also have these down-sloping lines here, both starting at two different locations and going to key pivots, and we can see we're right at the low end. Look at that downtrend into year end. So Biogen, for me, is going to be one that I'm also watching in January. It's a good quality name, very profitable, low price to earnings ratio versus a lot of what we see that has already run in 2024, which is, tech companies, AI, all of these things that have forward PEs of 50, 75, 100, 125. This, again, it's value, and I think that's going to be the name of the game. If you're going to be long, or at least if I'm going to be long stocks in 2025 with the risks of tariffs and economic slowdown now that the Fed is getting aggressive and saying, hey, listen, we can't lower rates anymore because inflation's creeping up, I need to find value names that are discounted and start accumulating those while still shorting some of the higher level overdone bubble stocks out there or the market itself. Speaking of which, I did pull the trigger yesterday, and I mentioned this in Trading the Close, but I did start my position on Apple by buying some puts. So if we look at the Apple chart here, folks, here's your Apple chart. Again, this is one where they're growing at like 3 to 4% a year, which is really, really low growth. I mean, that's growth of like Hershey and some of these other ones. Yet Apple is trading at a forward PE of probably 25. I mean, it is pretty remarkable how kind of elevated this is. Now, again, you could say, oh, but the iPhone upgrade cycle. Yeah, well, we heard about that 4 months ago. It never happened. Now we're hearing like, oh, their holiday sales will be good. Okay, yeah, okay, we'll see about that. But my point is that because Apple is one of the biggest, in fact, the biggest company in the market right now with a close to $4 trillion valuation, every dollar that goes into a NASDAQ-related stock or even an S&P or a Dow-related fund, what it's doing is it's a portion of that is going into Apple, and it's creating a bubble. I know it sounds weird to say Apple could be in a bubble, but based on valuation-wise, it is. This should be trading at probably a 15 forward PE versus a 25 forward PE, which puts a lot of potential pressure to the downside. So as I mentioned, I was looking at puts. I did pick up some December 2026s, strike 255, so basically right where it's trading right here, so at the monies. Now you might say, well, what the heck? Like, how did he give, and I'll walk over here to just talk about this, but why did he give himself so much time? I'm giving myself essentially 2 years. And I talked about this a little bit in Trading the Close, but you have to understand that every person, every trader, every person is fallible, meaning we can be wrong on timing. Timing is something that's the hardest thing in the market to get right. Going back to 2008 and 2009, I still remember I was still pretty early in my career, in my first 10 years as a trader, and I was like, oh my goodness, there's this big collapse coming. The financials, all of it, like I saw it a mile away. I also saw it a year early, right, before it happened. And so timing is something very key. And when you're playing options, remember, they can expire worthless if you're off. So if you give yourself like these 0-day options, pure and simple gambling, even a couple months out, you're basically saying that if I'm not right in a couple months out, I'm going to lose all my money. That's risky for me, too risky, in fact. And so I give myself a lot of time when I'm playing options. I don't mind paying a little bit of premium for that peace of mind to let the bigger pattern play out. So you look at this, and again, this is the key, is that for all I know, Apple's going to go a little higher in the near term. What I can tell you is that historically, the mean, the average, will come back to play on Apple, and that's what I'm playing for. Whether it's in a month, whether it's in 3 months, 6 months, a year, I'm playing for that bigger rollover, not only in the U.S. economy, same thing. Listen, in all fairness, I thought by the end of this year, and I said this last year, I was like, oh, by the end of 2024, we'll be in a recession. Well, we're not, right? Part of that is the fact that there's so much liquidity in the system because of the Fed, because of the government spending, because of all these things, right? But ultimately, that recession will come, whether it's in the first quarter, second quarter, third quarter, or beyond, and that will also impact. So the idea being is I'm in those puts. I gave myself lots of time. The beauty of Apple is I think I paid about a 10% premium for these at the monies, which is not that much. Apple could fall 10% in a couple days if it gets a scare. Okay. Let's move on here, folks. TLT, we can talk a little bit about TLT here on the charts. TLT continues to inch down. Let's reanalyze this chart and just see, because TLT, remember, if you go long TLT, you're essentially betting that rates are going to come down. Now, one of the things I like about TLT right now is you are oversold in the short term and you're into a pivot low. So I actually like TLT in the near term here. And again, if you're analyzing TLT, what you really want to do is you want to look at the 10-year yield. Now, technically, TLT is the 20-year, but at the same time, just look at the 10-year. I mean, they're going to basically move together. You can see rates are moving higher today here. We're just breaching this trend line. But overall, what's going to happen? We're going to come right into this resistance up here. So whether it's here or here, TLT to me actually looks very attractive as a buy. All right, one more January effect play, guys. This is a beauty here. Take a look at Mobileye. Mobileye is off of its lows. A couple things are catching my eye on Mobileye here. The first thing is this longer term trend line from here to here, and right here we broke down, but look how it's recaptured that line and now chopping and holding that line. And so when you look at Mobileye, the other thing I see too is that you have one of these patterns. What type of pattern is that, right? What's this pattern? That's a cup and handle pattern, essentially a cup with a bull flag. And that's really, the handle is always the bull flag. So again, sometimes you'll hear me talk bull flags. Essentially, when you have that pattern, it's a cup and handle. But again, it's a bull flag off of that. The idea being is that this one should be on watch as it's showing us signs of maybe going up. And also, if we get into this kind of EV, autonomous vehicle type environment, these guys could be in play. And so again, this is a much higher risk than a Pfizer, for instance, or a Biogen, in my opinion, because they obviously aren't profitable. But at the same time, for more speculative investors, this one looks very, very interesting. MBLY is the symbol on that one, I believe. Okay? All right, let's get into Bitcoin real quick here. Now, Bitcoin, if we take a look at the chart here, it is bouncing once again off that key 92,000 area of support, getting a little bit of a move up here. So right now, and we talked about this yesterday, you have resistance at 108, which has been perfect, that level I gave you guys, and support also at 91 to 92, which has also been perfect. Now, as a technician, you could say, okay, well, which way is this going to go? And the answer is pretty simple here, right? So when we look at this, you have to say, okay, first of all, we don't know for sure. Nothing is in stone. There's no 100% in this game of trading or investing. But what we do know is we just want to follow the levels. So as of now, we have resistance up here. We have support down here. Let's watch and see which way it confirms. Now, based on the bigger trends, this is and this is very interesting, in fact. This trend line goes back to the 2017 bull market high and connects through the 2021 highs before we tagged it right here. In general, the longer a trend line goes back, the more powerful the trend line. So if you look at this trend line, this one only goes back to November. So yes, it's support and it's been holding up beautifully, but this would be, if you rate these, this would be a 10 out of 10, right? So in terms of strength, and this one would be probably a 4 out of 10. And so what we could say is that, granted, we don't know for sure. I mean, a 10 of 10 can be broken. It's just less likely, but it could be broken through to the upside. But the more likely scenario is if we keep hammering here, eventually we go lower. I also am wondering if we get into January and the NASDAQ starts selling off, could that be the culprit? Like, the way I could see this kind of playing out, and again, I'm just gaming this, right? Again, there's always a chance that I'm totally wrong. That happens very often. So again, down. What if we do that? What type of pattern is that? So going into the holidays, it's unlikely the NASDAQ sells off. We could float higher. Looks like that's what we're doing today. You kind of go sideways to up on Bitcoin, but what type of pattern does that form? Classic bear flag, right? So again, that would be my expectation there. Okay, and again, remember, everything we talk about is probability based. So I'm giving you what is most likely going to happen, not necessarily what's going to happen, right? And that's just the nature of it. I wish I could be 100%, wish I had a magic crystal ball, but don't have that. No one in this world has that. And we just have to rely on logic, common sense, and technical analysis, all one and the same. All right, next up, let's quickly look at gold here as we take a look at the gold chart. Gold, again, if we just stretch this line out here, we can see, again, we're kind of just hovering right around that support area right there. Here's your midpoint. I think pretty cool to see the midpoints all align. In fact, we should add another circle here because this one worked perfectly right there as well. So again, going back, look at how the midpoint of the parallel has worked as well. By the way, that just adds credence to the power of the parallel, that it is a big parallel. Overall, I don't really have, like I said yesterday, much of a bias one way or the other here. It's close to 50-50, whether it's going to break down and go test 2,500 or is it going to break up. What I will say is that the gold miners are starting to look very attractive. I wrote an article on this one this morning on Barrick Gold. So again, by the way, the symbol on Barrick Gold is GOLD as well, so just don't get confused. But if we look at Barrick Gold, it is now almost 30% off of its recent highs, while gold is only probably less than 10% off of its highs, maybe just 10%. And so what's interesting about Barrick here, and I want to show you guys this, is that if we take a trend line, it's getting very, very close to this major support level. Now, granted, it's hit it many times, but if you're like me and you start to think about it and say, okay, well, you know, if we just game this out, let's game this out. So government spending, are they really going to cut it dramatically? Probably not, because if they do, the economy goes into a recession, maybe depression. So in general, politicians don't like to cut back spending because it makes them unfavorable to the masses. And so in the scheme of things, chances are the Fed's going to still print and lower rates eventually when the economy gets tough, and government's not going to stop spending. So fiat currencies are going to get printed, and this goes for Bitcoin as well. It's just that Bitcoin is much more of a risk asset right now. The idea here is, again, there's a level here at 15 on Barrick Gold that my guess is will create that next leg up as gold eventually heads towards $3,000 in 2025. All right, so again, Barrick Gold, GDX, GDXJ, I know a lot of people love the junior miners, but just keep in mind is that they are much more volatile. So in general, when you have as much volatility as we have in the miners right now, the Newmont Minings, the Barrick Golds, I would just focus on the best of breed right now until we get a firmer sense. If those all start to run, then eventually you jump to the small miners, the little ones. All right, silver real quick here, guys. As we enter the final stretch of this pre-Christmas session here. We can see here I've kind of gamed it out what I would think would happen here, and that's so far exactly what has happened. This, in fact, was drawn on by me with you guys maybe a week or so ago, and you can see it broke down. I still think at this point the likely scenario would be a float up back into this level and then that next leg down. I drew it over here. That was before, but again, essentially that's what you'd probably expect. Natural gas today. Natural gas is inching back up. I continue not to have a good read on this in terms of there's no trade. And you still have resistance here and support here, but let's see which way does natural gas go. These lines will converge somewhere out in the future. If we drag them out here and drag this out here, we can see that, again, they get closer and closer together. So eventually you're going to break. The question is, which direction are you going to break? And then lastly, oil, which I was, pretty negative on for a while. For the last 2 weeks or so, maybe the last week, I've really started to change my tune and say, guys, this is holding this technical level. This is bullish. And look at today. We're starting to creep up. You can see breakout with confirmation, consolidation above support. That yields a positive bullish bias or probability. And we're so far heading towards that $73, $74, $75 level. All right, guys, lots of alpha today, lots of different stocks that we've gone over. Again, Bitcoin, very interesting. Watch for that flag pattern to develop. And let's see what gold does. Let's see what the miners do here. Very, very interesting stuff. You guys, if you celebrate it, go have a wonderful Christmas time. We're going to have trading the close today at 12:30. Drew is going to rock it with you guys today at 12:30. And then we're going to take tomorrow off since the stock market's closed, and I'll be back Thursday morning for the next game plan at 9 a.m. live like always. All right, you guys have a great one. Happy holidays to each and every one of you. We'll see you soon. Take care.